Namaskar, I am Dr. Vandana Sonkar, Assistant Professor at Faculty of Commerce, Banaras Hindu University. I am presenting you a 12-week course on financial literacy. Financial freedom is something that is desired by all, however, is not something that comes naturally. If you don't take control of your finances and find a way to make your money work while you sleep, you will work until you die. This course will enable you all to equip you with the basic skills to become financially sound and to achieve financial independence. Let me first introduce you all with the course overview. In the first week, we will discuss the concept of financial planning and budgeting. In the second week, we will be going to discuss some key concepts of personal finances. The third week, we will be going to cover the meaning and types of banks and various products and services that are offered by the bank. In week 4, I'll talk about the various types of loans offered by the bank, and in week 5, I'll be focusing on the concept of cashless banking, banking complaints and ombudsman schemes. In the 6th week, investment in security markets will be covered, and in the 7th week, I'll be including the investment in mutual funds. In week 8, introduction to the basic tax structure in India for personal taxation as well as aspects of personal tax planning, exemptions and deductions for individual will be covered. In the 9th week, I'll include the process of income tax return filing and government tax saving schemes. In week 10, basic concepts related with the stock market will be explained. In 11th week, Demat account, book building and concepts like market sentiments will be covered, and in the last and 12th week, trading sessions, active and passive investings will be discussed. So today I am going to start the first lecture on Introduction on Financial Planning and Budgeting. So the contents that we will be going to discuss under this lecture are Introduction to Financial Planning and Budgeting, definition of financial planning, process that we need to follow to prepare an impressive financial plan, need of financial planning in an individual's life, and the process of financial budget and budgeting and its process. So let us first start with the introduction of financial planning and budgeting. At the very basic level, the ultimate goal of financial literacy is to attain the financial soundness and financial independence. For becoming financial independent, we need to acquire skills to prepare sound financial plan. We all have various goals in our life which we want to achieve in life, such as funds for higher education, owning house property and retirement, etc. Without proper financial planning and skills and knowledge, it is next to impossible to achieve all these goals. So, in this lecture, we will understand the concept of financial planning. Without proper financial planning, anyone cannot make their life easier because it prepares you with a sound financial roadmap for your financial well-being. It is a systematic approach of managing the finances to achieve short-term and long-term goals of one's life. Financial planning involves assessing one's current financial situation, setting objectives and creating strategies to achieve those goals. It involves creating a comprehensive strategy to manage the finances effectively. The outcome of the whole financial planning process is a path which needs to be followed to attain all the financial goals in the light of external hindrances like inflation, taxes, etc. It helps you to make informed decisions and allocate your funds. So simply, financial planning helps you to keep your finances in your control and to achieve all your goals and desires. The objectives of financial plannings are wealth creation, risk management, debt management, retirement planning and tax planning. So in the wealth creation, ones need to accumulate wealth over a period of time so as to make their future more comfortable and make their future challenges more convenient. In the risk management, we need to ensure the protections against the various financial risks and challenges that may come in future, and we can do it through the risk insurance and contingency planning. In the debt management, we need to manage the various loans and liabilities that one have taken for the purpose of meeting the expenditures of one's life. In retirement planning, we need to ensure the financial security during the old age when we cannot work. In the tax planning, one needs to manage their tax liability effectively to reduce the total taxes that they need to pay and hence save more for their future. So let us understand the whole planning process of financial planning to make your financial plan more sound and effective. The financial planning process involves several steps that an individual needs to follow to achieve their financial goals, in which the first one is to define your financial goals. Financial goals are the target one intends to achieve through the money management. We need to make 3 different types of goals in our life to manage our finances well. The first one of which is short-term goals. The short-term goals are having the limited time horizon and a narrower scopes in one's life. For example, purchasing a household electronics or furniture or house renovation expenditure or vacation spending. Next, one need to make their mid-term goals where the goals are generally for a time period of 3 to 10 years when they will fulfill. Examples of medium-term goals are down payment on a house, paying off a study loan, international vacation, or starting a new business venture. Whereas the long-term goals may be the planning your children's education, your children's marriage, and comfortable retirement. These goals are realized between 20 to 40 years of time span. These goals require disciplined investing because they cannot be compromised in any situation. Some of the popular financial goals that an individual prepare may be to make a budget and live by it, pay off credit card and debit card expenditures, save an emergency fund, save for your retirement. So, when you analyze your goal, you will discover that some time to reach while others do not. Thus, on the basis of time span, we can very easily clarify our goal and categorize it into 3 different categories, that is short term, mid term and long term goals that I have discussed now. Now, the next step of preparing your financial plan is assessing your current financial situation. One, before making their financial plan, needs to assess their current financial situation and the various types of earning or revenue that they receive in a particular time span. So, in this step, it involves reviewing your income, your expenses, assets and liabilities. In the next step, we categorize the income and expenses. So, for it, we identify the various primary and secondary sources of income, such as for a government employee, its primary sources may be salary, its primary sources may be revenue, or for a businessman, its primary sources of income may be the profit earned by their business. Whereas, the secondary sources may include income earned on investments, income earned on the profits on sale of fixed asset or any other kind of property that they own, or savings of taxes. Whereas the expenses can be categorized on the basis of the time that requires to be paid for them and the necessity of the expenditure. So, some of the fixed expenses are rent, EMIs on your purchases and salaries of the employees of your organization. Some variable expenditures may also be there, such as food, travel and raw materials required to run your and manage your business. These expenditures may be lower as well as higher as dependent on your needs and wants. Whereas some discretionary expenditures may also be there, such as entertainment, luxury items, etc., that can be avoided easily for a particular period of time. Separating the needs from wants to identify the saving opportunity is very important for every individual to make an effective financial plan. Next step in the financial planning is to create the budget. A budget is a plan that helps us to outline how we will allocate the income and expenses in order to meet our financial goal. For preparing a financial plan, we need to take a zero-based budgeting approach. We need to assign every rupee to define purpose, That is, what is the purpose of spending that money, whether we are doing some expenses, whether we are going to save it for the future, or whether we are going to invest it into some investment avenues. So we need to allocate the percentage of the total income earned by individual into 50, 30 and 20 rule for personal budget. 50% for the necessities to meet the daily needs and requirements of any individual. 30% of the revenue is used for meeting the wants such as the discretionary expenditures of anyone's life, and 20% must be used for the savings and investments. By doing so, we can very easily save and create an effective budget for our financial planning. So after creating the budget, the next step is to develop a financial plan, and to achieve the financial goal, we need to prepare the financial plan according to a timeline, as well as we need to prepare a strategy to achieve that. So we need to choose between the various types of investment avenues available into the market, such as the stocks, bonds, mutual funds and real estates, and depending on our preferences and our need, we need to choose between all these investment avenues in which we want to invest our savings. After that, we need to diversify our investment based on the risk tolerance and the goals of our financial plan. So if we need higher risk, we need to invest into the long-term investment avenues having some riskier avenues. The next step of the financial plan is the implementation. So in the process of implementation, we need to make our financial decision for the purpose of reaching to our goals. So we need to invest into the investment avenues and follow a rule of 50, 30 and 20 ratio to make our financial future more secure and sound. In the next step, we need to monitor and review the progress of our financial plan. So regular tracking of financial records will help us to analyze whether the financial plan is working well for us or not, and we need to adjust the future financial plan based on the changes that we are facing in our income and expenditure and financial objective. So with the help of this, anyone can prepare a very effective financial plan for their future, and they can save sufficient amount of money for the future. So with this, we come to an end to the process of financial planning. And now, so after creating an effective financial plan, next we need to understand why financial planning is important for us. Financial planning is very helpful for everyone because it helps to manage uncertainties involved in one's life. Everyone's life is full of uncertainties. It may be the various kinds of challenges such as sudden medical expenditures, job loss or economic downturns. A very good economic and financial plan provides us to buffer or handle such uncertainties involved in our life. Emergency funds created, insurance plan taken and diversified investments all play a very important role in the preparation of managing the uncertainties involved in anyone's life. Next significance of the financial planning is that it helps you to adapt with the various life challenges and changes. The major life events of anyone's life such as marriage, childbirth, buying a home or retirement often necessitates a change in the financial priority of one's life. Financial planning ensures that as life changes, financial strategies adapt accordingly, and it helps us to manage these transitions smoothly. Next is preventing financial crisis. So without proper financial planning, it is very impossible to manage the financial crisis that comes in one's life. So it's easy to fall into the financial crisis caused by poor debt management, overspending or lack of saving. So by budgeting and saving regularly and keeping track of your financial goals, financial planning helps individuals to avoid getting into severe financial difficulties. Next importance of financial planning is that it helps in maximizing our investment potential. So if we plan in advance and we prepare a clear view how much money is available for investment and what kind of investments and return we are expecting from different kind of assets, we can carefully plan and optimize their investment portfolios to achieve higher returns over the time. ensuring that their wealth grows in line with their financial goals. So, practical benefits of the financial planning for anyone may be it increases savings of the individuals, it helps to enjoy a better standard of living, it helps to be prepared for emergencies, as well as it helps us to attain a peace of mind. So, as financial planning enables managing our finances properly and efficiently, all these practical benefits can be achieved by preparing an efficient financial plan. Now, let us discuss the topic of financial budget and understand what is the difference between the financial plan and financial budget. So, many times people find that despite the availability of the sufficient quantum of funds in their life, one is still not able to meet the ends. This is because one is failing to prioritize their expenditures and needs of their life. Cash management is not something in which you can expertise overnight, and it requires a long period of time and experience to learn the cash management. Under this, one must be able to differentiate between the concept of economic needs and wants to learn the art of financial budgeting, and should follow a systematic approach of managing the spending. So, let us first understand what do we mean by the economic needs and wants. So, needs are the various requirements related with the essential goods and services that are required for the survival and basic functioning of one's life, such as food, water, shelter, healthcare and clothing, whereas wants are the various requirements that may relate to non-essential goods and services that enhance the comfort and quality of life for one. These may include the luxury items, entertainment, vacations and branded products. After discussing the concept of need and want, let us understand what is the difference between the need and want. So, we have bifurcated the need and want on the basis of its meaning, necessity, satisfaction, competition and non-fulfillment. So, needs are the things that are required by a person in order to survive, whereas wants are the various needs of one's life that are required by them in order to make their life comfortable. On the basis of necessity, we may say that needs are necessity and very crucial for the survival of one's life, whereas want is something which offers comfort but it's not necessary for their survival. We can very easily postpone our wants in our life. Next, on the basis of satisfaction, if we categorize the need and want, satisfaction is achieved only when the need is fulfilled, whereas sometimes in case of wants, merely thinking about wants can offer satisfaction to one individual. On the basis of competition, there is no competition in case of need. Each and every need is required to be fulfilled for every individual's life, whereas wants are competitive in nature, and depending on the availability of funds and the decision made about them, we can very easily choose which wants needs to be met first. Non-fulfillment, if we categorize both the terms on the basis of non-fulfillment, failure to fulfill the needs results at the end of life, whereas not fulfilling the wants can result in the social and mental distress for individual. So, these are the various points of differences between the need and want, and now we can very easily understand that we can postpone our wants for a definite period of time, and whenever we are having surplus funds with us, we can satisfy our various types of wants in our life, and accordingly we need to prepare financial budget so that we can understand when we need to spend the money for the purpose of satisfying a particular need, and when we need to save the money and we can postpone our wants for the future time period. So, now let us come to the next topic and understand what do we mean by the term budget. So, budgeting is the process of creating a plan for how to allocate income towards expenses, savings and investments. It ensures that the financial resources are efficiently used by everyone. A budget is a blueprint of all the income and expenses over a specified period of time, enabling you to allocate the resources effectively. So we can very easily understand that by preparing a budget, we can very easily estimate what different type of expenditure may come over a period of time and what sources of income we are having at present to meet all the expenditures, and we can very easily plan which type of expenditure needs to be met first and which expenditures can be postponed for a future period of time. So allocation of resources becomes easier with the preparations of budget, and it helps us to control our expenses and increase our saving and investment. So we can now discuss the objectives of budgeting, and the various objectives of budgeting may be expense control, saving and investment, debt reduction and financial stability. One can very easily prevent overspending and promote a disciplined financial habit with the preparation of budget, because they know in advance which of the expenditures are necessary, and accordingly they can very easily manage their expenditures in a particular period of time. Whereas the unnecessary expenditures or wants can be postponed for a future time period, and the money can be saved for the future investment. So it helps you to ensure smart amount of income that we can allocate to meet our future needs and wants, and we can save more at the present. It also helps us in planning the loan repayment systematically. Everyone needs to take loan for the different purpose. For example, for building a house, for education and for some other emergency purpose, we need to take debts from various financial institutions and agencies, and for the purpose of planning the loan repayment very effectively and systematically, we need to prepare budget so that we can very easily without any default pay all these debts towards the various financial agencies and institutions. The process of budgeting finally helps us to have financial stability in our life and to reduce our financial stress and uncertainty, as we can very easily analyze that by preparing the budget we can save for future, and we can identify which expenses are not required to be met at the present. We will be able to prepare a very sound financial plan and we will achieve financial independence also. This helps us to reduce our financial stress and uncertainties involved in the future. So these are the various objectives of the budgeting process. Now let us understand how one can prepare a very effective budget for their life. So now let us discuss the various steps involved in the budgeting process, how we can prepare a very efficient budget to meet our future expenditures. So the first step involved in the process of budgeting is the calculation of income. Every individual needs to understand that they have a definite sources of income over a period of time, and that is why at the time of preparing the budget, they should include all the sources of income. For example, for employees, we have salary income, that may be full-time salary income, part-time salary income or freelance salary income. Whereas for the businessmen or the entrepreneurs, there may be business income such as profits and dividends earned from their business activities. For some other individual who are owning some kind of property or wealth, there may be rental income, there may be some investment income also. Whenever we save our money into some saving and investment avenues, we may earn some revenue from those sources also, and there may be some other sources which are known as the passive income of sources. So all these different sources of income are definite over a period of time, and one need to ensure what kind of income may be earned during a period of time by them. After ascertaining the total income, one must understand what different kind of expenses they have, and for that they need to list their fixed and variable expenses. Fixed incomes are those which are needed to be paid regularly at a point of time, whereas variable expenses may vary over a period of time. So fixed expenses may be rent, loan EMIs, insurance premium, utility bills, internet and gas expenditures that may be needed to be paid by an individual to survive in a particular period of time. Whereas variable expenditures are the expenses that are incurred on the payment of groceries, entertainment, transportation, fuel, public transportation, shopping, clothing, etc. So we need to first understand what different type of expenditures we have, and we need to categorize these expenditure into two different categories, fixed and variable, so that we can move forward to the next step of the budgeting. So the next step of budgeting is to categorizing our expenses using the rule of 50, 30 and 20. So we have already discussed that everyone, for making their sound financial plan, must categorize their overall expenditure into three different categories, and the first one is 50% of the income must be used for the purpose of fulfilling the fixed expenditures and the variable expenditures of their life, such as rent, utilities and grocery payments, whereas the 30% of the amount of revenue earned by them must be used, or that can be used for the purpose of meeting the expenditures related with the entertainment, vacations and luxury items, and 20% amount must be used for saving and debt repayment, because this will help you to attain financial soundness in future. If we do not save the 20% amount of our total income, then we may face future uncertainties and unsoundness in the financial well-being. Then next step is of tracking the spending and adjusting our income according to the budget. So we need to prepare the budget on the spreadsheets or with the helps of the budgeting app, and we need to identify the various expenses, and we also need to understand which of the expenses are necessary for us and which expenses can be very easily postponed for a particular period of time and we can cut down on them. So we need to set alerts for overspending also, so that the postponement of expenditures must be done for sufficient amount of savings and investment. We also need to review and update monthly budget. So next step of the budgeting is review and updating the budget. So we need to adjust the various expenditures of our life, and we need to prepare our budget according to that, so that according to changing financial circumstances we can very easily understand which of the expenditures are necessary and need to be met at present, whereas what kind of other sources of income can also be thought of, so that to increase our income to meet our basic needs. We also need to compare our actual spending with the budgeted amounts, so as to understand whether we are meeting with our targets or not, so that next time when we will be going to prepare the budget, we will prepare more realistic budgets. So we need to set financial goals and adjust our savings for the saving contributions accordingly to have financial soundness and financial well-being. So with this, we come to an end to the lecture 1 of our course Financial Literacy, where we have learned about financial planning, its significance, the process of financial planning, budgeting, and we have also understood the difference between the needs and wants, and we have understood the importance of preparing the budget so that we can very efficiently meet the various necessary expenditures of our life, and we can also have sufficient amount of savings for the future. So both the budgeting and financial planning are very crucial for the financial well-being of an individual. While budgeting ensures efficient day-to-day monthly management of the money, whereas financial planning focuses on long-term financial success of an individual. By integrating the both, individuals and business can achieve financial stability, they can avoid debt and build wealth systematically. So at the end of the lecture, I would like to say that by efficient financial planning for a long-term period and by preparing the budgets for short-term, we can very easily understand what different sources of income we have and what expenditures we need to meet during a particular period of time, and accordingly we can very easily save for our future and invest it into various investment avenues for having future sound financial future. Thank you.